Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 24th, 2020. Wanted to get a quick update out to you. It is 10:49 Eastern Time as I'm starting the video. Mainly a follow-up to the charts that I sent today, but just wanted to do the video to just convey a little thoughts in here and where we're at and what to expect going forward. Start out with QQQ. I'm going to get to the semis as well, look at a few things. I already posted a chart today on SOXX. But first thing to note is we have a couple things going on today. We have a break of the blue trend line in QQQ. And we also have a test of that Tuesday low. That was July 14th, the day after the bearish engulfing candles. All along I said we'd need to take that out to be the next sell signal, and that is a major reaction low, an important reaction low, where the the bulls stepped up. Buyers, metaphorically speaking, bulls, bears, talking about buyers, sellers, that kind of thing, and foiled what could have been a nice topping stick, and it kept it in play. We never really took the top out. Again, I talked about that quite a bit. Not ideal action, and certainly not any confirmation. Like I say, bearish engulfing candles do come along during uptrends, and while technically speaking, you look at the textbooks, they're considered a topping or reversal candle, but not to me until I get confirmation with additional follow through. We never got that. We had green candles the next 2 days and never went below that first green candle there the following day. So that is, I still believe, a major reaction low, an important reaction low, I should say, and that's so far support. And so I'm speaking to a few things here. I'm going to speak to active trading, if you are an active trader, and I'm also going to speak to swing trading and talk about, for example, let's jump to the website. I had a question today under the post on the semis today. That's it. Let me just show you what I'm looking at. Intel and SOXX semiconductor analysis. Somebody asked, great question, hey, for the confirmed sell signal of SOXX, is it a daily close below the trend line, or is an hourly good enough? That's a great question. There's no straightforward answer, but here's how I answered it. Essentially, this is how it works. To wait for a solid close below a key support level, meaning a trend line, a bearish chart pattern, a well-defined price support level, etc., it provides better odds that the breakdown will stick if you wait for, I meant to say a solid daily close there. I'm sorry, I left out the word daily. That's going to give you better odds that the breakdown will stick and not prove to be a whipsaw signal. What's a whipsaw signal? What am I talking about? Well, let's jump back to the charts and I'll get back to that. For example, here's a trend line right there, and you can see this skinny part called the shadow. I'm sorry, yeah, the shadow of the candle. The fat part's the body, and the shadow's the skinny part. When it's down below, you call it a tail. When it's up top, you call it a wick. So that's an intraday pierce, just as so far today, that's an intraday pierce below the trend line. Now the day is still very young. We could close today, let's say all the way down, somewhere down here, or we can close the day back up here. We can close the day on the trend line or anywhere in between there. That's a typical range. You can see the size of these candles. And so it is not unusual on a daily chart to see an intraday break, only to see what we call a stick save, to see the candle close back on or above the trend line or support level. So back to the comment there, and so if you wait for a solid daily close, what does that mean? Meaning the body of the candle is well below, not right on the line where you have to zoom in. Is it on the line? Is it below the line? A solid close. That's going to give you a much greater chance that that breakdown will stick and not prove to be a whipsaw. Now the downside is, if especially when there's a lot of excess as a stock's very overbought, maybe it's a very well-defined level, or just sometimes you get a breakdown and things happen very fast. The selling kicks in, longs exit, shorts pile in, and so therefore, if you wait for a daily close, a couple things can happen. If you close way below the trend line, number one, you're not going to have a very good price. You're gonna be shorting. We're going to only talk about a breakdown here. A breakout, if it's bullish, same thing in reverse, as I'm talking about. But as far as a sell signal, if you have a solid breakdown and there's big selling, then you're going to have a pretty unfavorable entry, and maybe you don't even have an objective entry at all at that point if it's dropped too far and it's too close to the first support level or target. Here, let me see if I can find an example on it. Here's a great example. Intel, I already posted the chart today. Here was a breakdown of a wedge pattern back here. on July 11th. There's your breakdown. We traded as high as the trend line that day, so you had plenty of objective shorting entry there intraday. But by the time the day closed, the day was over. I'm going to have to turn these lines off for a second. Green candle, so fat body, that's going to be the close the previous day, and a red candle, so at the bottom of the body. So we closed down 6.5% that day. You might not have wanted to short down 6.5%, and if you did, you went a little bit profitable the next day, and then you were quickly underwater, and you really never, until today, never really got very profitable in that trade. However, if you shorted the breakdown, you did. So all I'm trying to say, not trying to be confusing, there is no easy answer. For everybody it's different. Every chart pattern it's different. Talk about that as well here. You just have to, I don't know, there's experience, and it's more of an art than a science of knowing which stocks might tend to fall faster. Also knowing the stock's history. Does that stock have a history of sharp drops once it breaks support? And a lot of things like that go into there. So to answer the question is, there's no clear answer, but I did go on to say that, although every trade setup has different variables, even on the same trade, the ideal entry criteria or criterion, if it's a single entry point or various criteria, that for one trader might not be the same for another trader. In other words, an active, nimble trader might short the break intraday, and if they see a reversal, something that convinces them to get out, they can exit quick and not take much of a loss. Whereas a more conventional swing trader investor might want to wait for that solid breakdown, especially in a bull trend with a lot of fake outs recently. So that's what I was talking about there. Now we're going to get into the charts here, and I'll talk about ways I trade. I wear multiple hats. I talk about that all the time. I'm a swing trader. I'm a day trader when the opportunities are there. Not each and every day. I don't make day trades every day, but when volatility is high, or even if it's not, if I see an opportunity, I'll jump in and jump out of something. Sometimes I'm in and out of the same futures contract or ETF or stock 2, 3, 4, 5 times a day at times. And so that all depends on my accounts. I have active trading account, and that's why I post some of these micro levels and these little zigs and zags in the NQ and QQQ, and we're going to get to that in a second. And then you have IRAs, long-term accounts, and so I went on to say, look, bottom line is, I think today's breakdown in the semis, a la Intel, offers at least maybe a starter short position, and if you're aggressive, maybe a full short position. So we're going to get to those charts now. Let's look at that. Before we get into the semis, let me loop back to the Qs, and we'll talk about a couple things about swing trading and active trading. Okay, so if you're a swing trader, is this the highest probability short entry? No, because although we're below the trend line, number one, as I just talked about, we didn't close the day yet under it, and certainly not solidly. You still have 4 out of the 5 fangs to report. Intel is the 6th largest, I believe, or always was for a while, but it just doesn't have the impact on the NASDAQ 100 because its market cap is, you look at Apple and it's a 1.6 or $7 trillion company. Let me load my watch list here. Okay, here's the holdings in QQQ, and you can see I sorted by this column, market capitalization. Apple's a $1.7 trillion company, Microsoft 1.6, Amazon 1.5. This is what moves the needle on the NASDAQ 100. As big as Intel is, and it was the 6th largest for a long time, looks like Tesla just leapfrogged it. Tesla's only 288 billion only. Intel's only 262. So again, Intel is a small fraction of what Apple is. And so Intel, although it happens, the Qs are down today, but I watched the futures last night when Intel was down 10%. It didn't really move the needle that much on the NASDAQ 100 futures or QQQ and after hours. They just happened to follow through today. Now, Intel has, I think, longer-term repercussions on the Qs because it is the leading stock, the largest of the semiconductors, leader in the sector. And when the leader dies, the rest tend to follow. Birds of a feather flock together, particularly in the semis. There are sectors where they all have their different business models, and there's some disparity within the semis. But for the most part, when the sector is in a downtrend, a clear downtrend, the vast majority of the semis are also, and likewise in a bull trend, most are. So this again, the semis are really considered, at least I consider them, the canary in the coal mine for the tech sector as a whole. They're a subsector, and so that has lasting repercussions, or may. We're going to get to the semis in just a second. But with all that being said, again, Intel or even all those semis together aren't going to move the needle as much as Apple, Microsoft, and Amazon. On only Microsoft has reported. We still have Alphabet, Facebook, Apple, Amazon all coming up to report soon, and then you have resistance right there. So where am I going with all this? Not an all-in entry yet because we fell right to support, and so far they stepped up and defended the support. Let's talk about that real quick. Okay, and this is NQ. NQ has just been, and it's, again, I say this often, the technical analysis tends to shine really to me on the downside because that's where traders flock to it to look at support resistance levels. NQ for the last 24 hours has just been an ATM for me. It's been a money printing machine. You had just very easy and clear technical levels, a very well-defined trend line. It goes to the left. That was posted before we even broke it yesterday, and we didn't gap down below it or anything. There was an objective short entry, big drop, at which point that was the first target laid out in advance. That's with the arrow breaks. If I show you this and this, each one is where you get a reaction or expected reaction. So as I mentioned yesterday, I was able to reverse there, go for a little bounce, trail tight stop. And then you can see this set up last night. In the evening, here I'll zoom in a little bit, we started setting up a textbook looking bear flag. This was after hours. Broke down even before I went to sleep. It was about 11 p.m. last night or so. We broke down, and there's your flagpole, there's your bear flag. You broke down from the bear flag, there's a sell signal and another sell signal with that impulsive drop below. You got it, that same 10,508 target that was listed in advance. Support is support unless broken. So this is TA, this is my trading style. When I list these targets, and that's why I have arrow breaks, there's no guarantees, but the odds that you're going to have at least a reaction on the initial tag, then first drop to it, is pretty good. So you can active trade. Might not look like much, but every point on the NQ is going to put over $1,000 in your pocket. So, every percentage point, that is. And then you broke down, you went down, and earlier this morning had next target with an arrow stopping here at this support zone. That's between 10,290 and about 10,337 right there. Almost a perfect kiss of the bottom of that channel right there, the zone. And what I refer to as a support zone, if I have a single line, that's a support level. If I have two support levels in close proximity, I call that a support zone. And we hit the bottom of that support zone and bounce to the perfectly, and that's about a 2% bounce again, so several $1,000 in your pocket per contract of NQ. And if the big contract is too much, the E-minis, then you can use MNQ, or of course you could use QQQ. Now you're going to see these charts a lot, and I know the futures aren't for everybody, but again, it's just round the clock trading. It's this that you can see last night. You can see what's going on. You couldn't see this in QQQ. This didn't exist because QQQ stops, I think, is at 8 p.m. in the after-hour session, and then this kept going and it broke down last night. There was your sell signal. If you were long QQQ at the close for the bounce, guess what? You would have theoretically been profitable, but you weren't because this is where you moved down overnight and then you opened down. And so a gain, went to a loss and you couldn't exit. You can't exit QQQ between the after-hour session and the next pre-market session in the morning. And so therefore, that's why I like futures. It's kind of round-the-clock stuff. And now here we go. I'm doing the video right now. We've come full circle. This morning I mentioned on the last update that we had bounced back to the 10,508 level, and that was an objective short entry for the next leg down. If you didn't, if you weren't up all night or early in the morning for this, you could have shorted there, and that was about, I think, a 2% drop, and this was about a 2% bounce once we hit that target. So point being is just behaving very well to the technicals. All these levels were here in advance and outlined, and now here we are, bounce back to resistance, and it's a pretty good resistance because we've already tested it a couple times. And you can see all the levels here, all the reactions from below right here, reactions from above, a little whipsaw through there, but and then we snap back above it, more reactions, and there it is now. So where do we go from here? Well, I can say it's an objective short entry, but look, we've pretty much we didn't hit the full measured target, but close enough for the bear flag. We have 4 of the 5 fangs reporting. We hit that support on the daily chart, so you don't see it here because this is a 60-minute chart of NQ, but that's that same reaction low from that Tuesday a week or two ago on QQQ. So this is my kind of stand back time on the active trading stuff. That's all active trading. And again, swing trading goes to the fact you have to factor in that the 4 of the 5 fangs still are going to report over the next week or so. I do think, based on the posture of the charts, the reaction so far to some of these market leaders like Microsoft, Intel, I think that the next correction is most likely started. Things are going to be volatile. And so, for a typical swing trader, I think maybe start easing into some swing short positions. It's just not an all-in moment yet. Break of today's lows will be your next sell signal, because you can see intra-period we slightly dip below that low on Tuesday. But again, at the very same time, you hit support on NQ, and that's why I do these various charts. If you're wondering why, Randy, just pick one, do QQQ or NQ. That's why I look at them all, because there's different subset of traders. Some people only trade QQQ. Some people only trade NQ, yet others only trade SPY, and others trade ES, and others trade IWM, and et cetera, et cetera, et cetera. SPY has broken the trend line as well. Negative divergences say that this is probably, whether we snap back today or not, in the coming weeks to maybe months, we probably head down. This is a first divergent high we've had on the daily time frame since before the 36% drop into the March lows. Let's look at small caps. Small caps kind of going nowhere lately. Had this level that saying I've had it around it's about 145 to 146 right there. A purple line, maybe a little bit above. We broke out, but we've held above it, but not by much, and it wasn't an impulsive breakout. I think the small caps are just waiting to get a cue from the large caps where they're going to go. As of now, looks fairly constructive there, but there's some things on RTY, the small cap futures, I want to show you. Okay, this is the 60-minute chart of RTY, Russell 2000 small cap futures, and we do have a sell signal recently. We have this nice bearish rising wedge pattern, similar to the bearish rising wedge I showed you on ES recently. We have a breakdown, not super impulsive yet. I'd say there's a little bit, and there's some support right there, a little bit below. I don't know, that's 1450 something right there ish. There's a breakdown, but again, we're not going too far because the NASDAQ 100 just hit support. I think the S&P 500 also hit support today, and but either way, it is a breakdown, and based on this, I do favor more downside. It's just what's going to happen near term. You have so many earnings, big earnings this week and next, that trading's going to be a little choppy, and it's going to be whippy, and if you run tight stops, you're probably going to get stopped out. So I think either be an active trader, like I just showed you on NQ, hit and run, get in and out of those levels. You can't stay too long to the party. When support gets hit or resistance is broken, that tends to move pretty fast. Or it's a swing trader, like I said, maybe just start layering in to shorts. Let's get to the semis. There are other semiconductor ETFs such as XSD and SMH. I like this one because if you, let's say you don't have the ability to short for whatever reason, if it's an IRA or you don't have a brokerage account, but your broker, it's not a margin account, you can go long SOXX, which is a 3-time semiconductor short, and it tracks the same exact sector. So this chart should be, now there's going to be decay on a 3-time leverage ETF over time, but other than that, it's the same chart. So you can use XOXS. You go off those levels, cover when it hits those supports targets, but then trade this when you go long SOXS to short the semis. I don't have this one marked up yet. I'll try to get some targets out to you guys there, but let's go back here. Again, they track the same semiconductor sector, whereas XSD and SMH, they track a different basket of semiconductor stocks. Now, they're all going to go up and down roughly together, but not in the same exact percentage term, because they have different weightings, and some of the holdings will be different. All right, so that's it. Little sell signal there. Nothing huge yet. Support below, but Intel broke down today. And Intel, as I talked about before, this I talk about quite a bit. Heading into earnings, with the stock chart is clearly bearish or bullish. That's usually the way the stock's going to go. On Intel, you had a very impulsive solid break below that rising wedge pattern. This was a divergent high right before that, and this looks like the third wave down. This is wave 1 in the correction, wave 2 counter trend rally, and so far a wave 3 down. Is it over? Well, that speaks to how aggressively, or if at all, you want to short today, because as I mentioned, Intel is at a long-term trend line right here. This was a trend line that has been respected several times, which helps to validate it, starting there, almost hit there, there. This was a little whipsaw, right down through, right back above, and we're there again on that trend line. And so far, a reaction. We had a brief momentum-fueled overshoot today. This is a weekly chart, but so far, this divergent high is playing out. And in the bigger picture, I just showed you 3 waves on the daily chart. Here's what we see on the weekly. Wave 1 down, wave 2 up, what I believe to be wave 3 down, and it'll be in a confirmed intermediate to even longer term downtrend if and when this recent low gets taken out. And we head down, and that'll ultimately, I haven't laid out this target here since back in 2018. I had 2 targets back in 2018. I'll give you on Intel, a weekly chart, a 24% target was on this break of this bearish rising wedge. And we hit that target once, we bounced up, put in a larger divergent high, hit it again, bounced up, put an even larger divergent high. So this to me, let me get rid of all these lines. I know I'm talking fast. I see a lot of stuff in these charts. This and this. Here's your divergence. Been building. These were little divergent highs on the weekly with quote unquote little corrections of 34%, 34% divergent high, small little divergent high, small correction 14%. Decent divergent high, 26% drop. A little bit bigger divergent high, a little bigger drop. Even bigger divergent high, and that's why, this is where I'm looking at to bring me down to that target I laid out all the way back then of 38.27. Now, at this point, if we hit it, it's going to be more than the 32% drop off the highs, because this was where I was looking at it back then. And what happened is we keep hitting my first target and bouncing, but we haven't gone up much higher. In fact, we've just continued to diverge. So that's kind of bigger picture stuff. And I can't promise you at all that this pans out, but what I can promise you, if it does pan out, the semis are going down with it. Intel is not going to drop down another, another 25, 26% from where we're at today without taking the semis down with it. And last but not least, SOXX on a weekly chart. Weekly chart kind of paints a bigger picture. I should have had it marked here. You get these divergent highs on a weekly time frame, and that sets up your trend trades. Multi-week, even multi-month swing trades. We had a divergent high back in 2015. That divergent high, followed by a sell signal shortly afterwards, was good for about a 27% drop in the sector. We had a divergent high back there in early 2018, it looks like, and you can see the sector fell about from high to low, dropped over about 9.5 months, about a 26% drop, and that's it. More divergences. These are all double-digit drops. Divergent high, correction. Divergent high, correction. And again, you short a divergent high? No. Because you can continue to diverge, or sometimes it doesn't play it. You short the trend line break, sell signal, breakdown, back test, 2 objective short entries, breakdown of this uptrend line, secondary breakdown, 2 objective short entries, back test, another objective short entry, back test again, another objective short entry. That's what we need. And there's your uptrend line right there. Weekly chart. It meshes with that, should mesh with that daily uptrend line that I have on the daily chart I just showed you. And here's a weekly chart. Same thing holds true as I said in the beginning of the video. You want the highest probability for the trade. You want to see a solid weekly close above here. What's the downside to that? Well, a lot can happen in 1 week. There's a lot of hot air in this market. And maybe that candle looks like this. Or maybe it looks like this. Or maybe we keep going up for a while and don't break down. Anything's possible, but again, there's your sell signal, there's a sell signal, there's a sell signal, and another objective short entry. Sometimes you back test, sometimes you don't. Okay, we'll wrap it up here. What to expect the rest of the day? Well, I suspect, technicals have been working well lately. This is a pretty decent resistance we've rallied back into, so that ideally should cap any upside from here. If we didn't have four of the five fangs still to report, I'd have a higher degree of confidence, but I do favor this, and I think it is certainly objective here. And when I say it's objective to short, is it objective to short and then allow for this, a back test of that trend line, or allow for a run up to new highs? No. If you're swinging for the next leg down, or if you're even positioning for a swing trade, and you're going to just use objective bounce backs to these levels, give a stop a little bit above. And then again, how far above? Well, it depends how far you're targeting. I'm looking at a 60-minute chart here, and as time goes on, I'm going to zoom out farther and farther. I'll go back to this. Here's 3-month price action on the 60-minute chart. But should we take out today's lows with conviction? That's where I start focusing on the daily charts and look at these targets on the downside on the daily chart. So QQQ. All right, let's wrap it up here. We'll do an update today at the end of the day. We'll see what happens and go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.